A reprieve on Africa's second worst performing currency as the Zambia Central Bank moves to curb volatility. We bring you an analysis on this development and the state of the country's economy just after a hotly contested presidential election. Another trading week comes to a close. This is Global Business. We're bringing you all the latest developments on the business front from within the continent. I am Penny Nakaribe live from Nairobi. It is 9 p.m. here in East Africa, and wherever you're joining us from, welcome to the show. Coming up, it's back to business in Sierra Leone after President Koroma lifts movements restrictions over Ebola. And better days ahead of Egypt as government projects the economy to grow by 4% in 2015. Now, the number of African companies listing shares could rise by a quarter this year if all the firms planning an initial public offering move ahead. That's according to international law firm Baker & McKenzie. Shares on many African bourses have offered enticing returns in the past 5 years, but investors have complained about limited number of IPOs, high fees and poor liquidity. The law firm for mergers and acquisitions involving emerging markets said 30 firms were preparing to list this year, up from 24 in 2014. Last year, the number of IPOs had already risen by a third to the highest level since the 2008 global financial crisis, raising more than $2 billion. According to Baker & McKenzie, firms in the real estate, financial and energy sectors are expected to be the most active, and new listings would be on markets in Egypt, Kenya, Morocco, Nigeria, South Africa and Tunisia. Now, Kenya's standard gauge railway construction is well on course and developments are going according to plan. That is what the Kenyan government is saying. Here's Mahia Mutua with the details.
The first rail of the standard gauge railway was laid at Mtitwandei, and Kenyan President Uhuru Kenyatta, along with several cabinet secretaries, were there to witness. The 4,000 tons of metal rail were shipped in from China by the contractor, China Road and Bridge Corporation. They are being laid from Mtitwandei all the way to Mombasa. Over 300 kilometers of the rail path have already been cleared, and the foundation construction is now in progress. Once complete, the routes of the rail will include Mombasa to Nairobi, 485 kilometers, Nairobi to Malaba with 520 kilometers, and a Kisumu branch line of 174 kilometers. 2 new corridors will be built in Lamu to Nedapal of 1,350 kilometers on the border with South Sudan and 700 kilometers from Nairobi to Moyale on the Ethiopia border. It is envisioned that neighboring countries, Uganda, Rwanda and South Sudan, will extend the railway to their capitals. The project costs around $4 billion, of which 85% is to be loaned by the China Exim Bank. The government will finance the rest through budgetary allocations and the recently introduced Railway Development Levy, which charges 1.5% on imports. Upon completion, the line will ease the cost of doing business significantly by reducing transport time and costs to and from the port of Mombasa. This in turn will boost regional trade among the East African Community Bloc. The railway is designed to accommodate speeds of up to 100 kilometers per hour for cargo trains and 120 kilometers for passenger transport. Mahia Mutua, CCTV.
Now, with the Ebola outbreak weakening in West Africa, Sierra Leone has eased restrictions on movement and commercial activity, even as the president warns that the fight against the deadly disease is not yet over. More than 21,000 people are affected by the disease, and nearly half of them are in Sierra Leone. But the number of new infections is now falling in the West African nation, along with its neighbors Guinea and Liberia were also affected by the hemorrhagic fever. Sierra Leonean President Ernest Bai Koroma announced in a national broadcast that starting Friday, the country would lift all district quarantines and extend business hours. Koroma said that while people must remain vigilant, easing the restrictions would jumpstart the economic recovery. Now, the World Bank has cut its estimates of economic damage on a continental scale from the Ebola outbreak in Guinea, Liberia and Sierra Leone to less than $6.2 billion compared to an earlier estimate of well over $30 billion. Now, on October 8th, the World Bank argued that in the worst-case scenario, that outbreak would cost the West African region over $32 billion in foregone economic output between 2014 and this year. At the same time, the World Bank forecast that most of this damage would be concentrated in West Africa, with just 3% of the damage in the worst case scenario in the core 3 countries. So what has changed in those 3 months? For starters, the forecast damage in the core 3 countries this year has almost doubled, rising by 96% from $815 million to $1.6 billion, despite a number of improvements in the public health response in Guinea, Liberia and Sierra Leone, public awareness campaigns and a decline in transmission rates in all 3 states. So with more data, the World Bank has also given a better idea of the economic damage this outbreak has caused in the 3 core states. Between them, they've lost over $500 million, or about 5% of combined GDP. And to say their 2014 growth has nosedived would be an understatement. What are we talking about? Take a look at this. What has changed is that the bank's focus on where the damage in terms of foregone GDP is concentrated. Now, the October report focused on West Africa, but the January update focuses on sub-Saharan Africa. Damage estimates vary from just over $500 million with the current limited spread to over $6 billion with a significant additional spread. And even in that case, most of the damage is limited to West Africa, and the measurable costs that can be traced to South Africa and Kenya are mostly because both states are travel hubs, and avoidance behavior by incoming business persons and tourists can be seen in those locations. Now, let's move north now. And Egypt can expect economic growth of about 4% in the 2014-2015 fiscal year, which ends in June, boosted by rising confidence and a windfall from lower oil prices. Finance Minister Hani Demian made those remarks at the World Economic Forum in Davos. Demian noted that the budget deficit for this year would fall to between 10 and 10.5% of gross domestic product, down from 12.6% in 2013 and 2014. Now, Egypt suffered a severe economic crisis after the 2011 unrest, but President Abdel Fattah el-Sisi has introduced an array of reforms to help revive business activity. The North African country is holding a major international investors conference in mid-March this year to seek support for a range of long-term projects, from the construction of a second Suez Canal parallel to the existing waterway to industrial and agricultural projects. So a very optimistic picture for Egypt. Let's now get more from Yasser Hakim. He joins us live now from Egypt's capital, Cairo. So Yasser, we are obviously hearing the finance minister projecting a very rosy picture for Egyptians. He says the economy will grow from 3.8% to well over 4%. So what are the boosters of this growth?
Well, first of all, like you mentioned, the oil prices going down. That's very important segment because it eats up a high percentage of the budget, especially that the government subsidizes oil and petrol. That's one part. Another is the picking up of major sectors in the society, in the economy, such as the real estate sector, the telecommunications sector, and more importantly is also the tourism sector, which is picking up rather quickly recently, and those would bring in much needed income. That will be followed also by the summit in Sharm el-Sheikh next March, which the government hopes will succeed in garnering or bringing in, attracting a lot of foreign investments that's needed to create some kind of catalyst in the economy. But more important for Demian, the minister, is that there is now trust in the economy and in the economic reforms that have been put by the government, and the trust comes from the international financial institutions such as the IMF, the World Bank, and the credit ratings, which have all been positive in the last couple of months, and this could bring in more boost to the economy.
Right. So, yes, this week we've seen a fall in the official exchange rate of the Egyptian pound, and that has brought it closer to the rates that we see at the black market. Now, last year, the government devalued the pound, but at the same time cracked down on black market dealers. Is that the same strategy they've used this time around, or have they changed tact?
It's a mixture of both. The government has eased the pound a little bit to try to attack the black market, which has been hard to infiltrate in the last year. The margin was very wide between the black market and the official exchange rate, and the government wanted the central bank actually wanted to take the step. At the same time, there was a high demand on dollars in the last 2 weeks from big companies that had needed dollars to trade and to import products in the last couple of months. So there was a high demand, in the last couple of weeks, and there was a high demand for dollars. We expect it to stay stable for a while at this rate and will not be devalued more, as a more devaluation would cause higher prices, which would cause unrest in the economy, in the society and with the Egyptians. So the government will keep it as it is for now.
Right, so let's talk about the Egyptian bourse, Yasser. It's been on a steady climb since last year. What is driving this rise, and how much longer is this rally expected to last?
You're talking about the stock exchange, or in this case, this could last for at least another week or 10 days. There is a positive atmosphere coming up, especially with the marking of the anniversary of the 25th of January revolution. There were fears that maybe there would be a lot of unrest, but actually the market has gone on the contrary on a positive scale, and there was a lot of buying and selling in the market during the week. It ended up on a high, and expectations it will go on for another week or 10 days.
All right, Yasser Hakim, interesting developments there in Egypt. Thanks very much for joining us, Yasser Hakim, live for us in Cairo. Right, so let's take a look at the markets now, and it was a splash of green right across the main bourses that we track here on Global Biz. The AGX though was closed for Friday prayers, as is the case every Friday. Still ahead, a reprieve on Africa's second worst performing currency as the Zambia central bank moves to cut volatility. We will bring you an analysis on this development and the state of the country's economy after that presidential election. Plus, a UN economic think tank predicts growth in Africa, but cautions of a poor pace of enhancing regional trade.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
Effects of the austerity measures are evident and were expected. Egyptians, however, seem to be patient about it. But El-Sisi told government he wants to control the prices promptly before people's patience runs out.
You're watching Global Business. Welcome back. Now, Zambia's kwacha, Africa's second worst performing currency last year, is on the rebound after this week's vote and moves by the central bank to curb volatility. With the presidential by-elections over, Zambia hopes to see the speculative tendencies of the private sector ease off. The currency of the continent's second largest copper producer slumped as prices for the metal dropped and the country implemented a new mining royalty system, which an industry lobby group said may frustrate production. Analysts say the local unit will keep a bullish tone against the dollar, trading within a 630 and 640 range in the near term. The kwacha, which had weakened by 13% last year, advanced for a third straight day, climbing 0.7%. The Bank of Zambia, which has been watchful of late, making interventions aimed at smoothing out volatility of the currency, said recently that the currency's strength is due to increased supply of US dollars on the market. Let's get you now from Farai Mwakatuya. He's live for us in Lusaka. So Farai, the kwacha was Africa's second worst performing currency last year. It is now on the rebound. What are the factors that have led to this positive trend?
Well, you're right, Penina. The local unit has appreciated by about 1.3% against the US dollar in the last week or so. And that is directly down to efforts being made by the central bank here to intervene and shore up that kwacha. As early as the third quarter of last year, we know that the central bank came in and started using various monetary policy instruments available to it to try and shore up that kwacha, and we're now starting to see the dividends of that.
Right.
Penina.
So Farai, Zambia has averaged 6% to 7% growth as the mining sector boomed, but that's slowed to about 5.5% last year. The IMF says it could ease further with the price of copper reaching a 6-year low this month. So with another election due late next year, what strategies are there to turn around this stuttering economy?
Well, it's certainly a cause for concern here to the government and to economic analysts and policymakers, the fact that Zambia seems to have all its eggs in one basket, so to speak. And the issue of diversifying this economy is certainly something that has been talked about for a while now. Some of the practical ways in which that can be done in some of the sectors that are being targeted is, if you look at tourism, for instance, there is the attraction of the Victoria Falls, but there's also a need to develop and promote the other tourist attractions within the country, to develop infrastructure around them, make them more accessible, build roads, build airstrips, and develop airports to do that, as well as market the country a lot better in the Western European markets. You look at agriculture. That's another area that Zambia is tipped to do very well. There's a good climate here. There's about 40% of Southern Africa's groundwater is found here in Zambia. So there's a lot of potential in that area as well for Zambia to do extremely well. And so those are some of the areas that perhaps the incoming president can quickly intervene and start to develop in order to diversify this economy and perhaps look at non-mining revenue. Penina.
Right. So, Farai, we all know about the implemented new mining royalty system put in place there in Zambia, and some say that it may hinder copper production. Now, for a country where copper accounts for 70% of export earnings, is there a likelihood that this new president will review this new tax system?
Well, certainly there's been a lot of acrimony in the copper mining sector because of that new royalty structure. A lot of the mining companies saying that it doesn't take into account the cost of production and it only focuses on turnover. And we do know that negotiations have been underway between the mining companies and government, and certainly the two front runners in the presidential race have talked about this tax on the campaign trail. One of them saying that he will definitely review it. The other, PF's candidate Edgar Lungu, saying that he's open to speaking and negotiating with the mining company. So we certainly see this being reviewed or relaxed or revisited by whoever becomes the new president of Zambia.
All right, Farai, thanks very much for those insights. Farai Mwakatuya live for us from Zambia's capital, Lusaka. Now let's turn to the World Economic Forum, where the issue of climate change was given center stage by United Nations Secretary General Ban Ki-moon. Speaking to delegates at the forum, he said that 2015 must be a year for global action against climate change. The Paris Climate Summit, scheduled for December this year, is meant to discuss ways to boost long-term action to stem rising greenhouse gas emissions. This is after discussions during the Lima Summit last year led to foundations being made to possibilities of a Paris Accord, as the largest emitters, China and the United States, agreed to jointly limit their emissions.
2015 is a year for global action. We are faced with the multiple crises in this world: geopolitical, social, economic, and sustainable development. The year ahead must be a time for our strong commitment and for a global action. With the adoption of the post-2015 development agenda, with a set of sustainable development goals and an agreement, universal and meaningful climate change agreement by December this year in Paris, I think we can set our life, our world on course for a better future.
Now, private investment and consumption will be the key factors for economic growth in Africa this year. That is according to a new report released by the United Nations World Economic Situation and Prospects. The report estimates an increase in growth to 4.6% this year, up from 3.5% last year. 3.5%, that is. Now, CCTV's Leslie Mirungu takes us through the report that shows hope for Africa despite the current political unrest, the terror attacks, and the Ebola epidemic.
The report by the United Nations World Economic Situation and Prospects 2015 estimates growth for the African continent to go up from 3.5% last year to 4.6% in 2015. Private investment and consumption, which have been the key drivers in the past years, will once again influence the growth. Of the 5 sub-regions, East Africa is expected to make the fastest growth this year by about 6.8%. However, emphasis should be made on the need for intra-African trade.
Africa still imports more than it exports, and trade within Africa remains very low, except in East Africa and within SADC, where trade is picking up. African countries also need to do more in order to really promote inter-Africa trade as a new source of growth.
With new gas explorations and increased investment in the mining sectors of countries on the continent, prospects are good for Africa's economic growth.
Africa's economic growth is far less than its potential. So we have the potential to grow at 7% or more, but we are growing at around 5%. So we have a huge potential to realize.
However, the report highlighted the risks arising from the political instability, terrorist attacks, and the Ebola virus, which all, if not contained, will negatively weigh in on investment, trade, and tourism. The United Nations has also recommended restructuring of policies that will ultimately lead to increased investments, both foreign and locally, in the different sectors of Africa's economies.
About 25% of Africa's growth depends on primary commodity exports, something that we want to see changing as soon as possible because of the reasons I mentioned, and because primary commodity production and exports are not really very conducive to employment, not very conducive to social development and stability, economic stability.
Oil importing countries are expected to be the major beneficiaries of the recent fall in oil prices and other commodities. Leslie Mirungu, CCTV.
A quick look now at some commodity prices. And oil prices rose Friday after the death of Saudi Arabia's king, added to the uncertainty in global oil markets. Although the new ruler indicated immediately there would be no policy change, some analysts said oil investors were worried about a possible change in Saudi oil policy and the security of the kingdom, but repeated assurances of continuity from Riyadh helped calm the market. Still ahead, Zimbabwe enters into a pact with Chinese firms to spur growth in the ICT sector.
Having lived in 4 different African countries and with a diverse background, I cherish the personal as well as professional experiences I've had across the continent. It's this understanding of the place I call home that drives me to tell stories about its people, its needs, present and future.
There's just so much happening in Africa in terms of the way forward and development. It only brings positivity.
My place at CCTV Africa is about creating awareness around the realities of a continent that is indeed complex, vibrant, and has great potential.
Africa is my home. How it prospers, the challenges it faces, its people all matter to me because this is my future. I'm Famida Miller and I'm a reporter and anchor at CCTV Africa.
Zimbabwe has intensified efforts to develop its information communication technology sector by inviting Chinese companies to invest in the industry. The South African nation is now benefiting from improved service and international standards of carrying out our operations. Leslie Mirungu has that report on Grassroots tonight.
Zimbabwe and Chinese companies are in partnership to develop Zimbabwe's information communication and technology sector. The investment partnership includes technology scholarships for Zimbabwean students to attend Chinese universities, as well as the training of personnel by Chinese expatriates.
There are many areas of cooperation that we have discussed, which include, as the ambassador has already mentioned, the opportunities for young people to learn more about technology through Chinese universities, and if we can have opportunities of more scholarships and special rates for Zimbabwean students that want to study in China.
Chinese ambassador to Zimbabwe, Lin Lin, says his country is committed to grow Zimbabwe's ICT sector.
We are also trying to encourage Chinese companies in ICT area to start invest in this country, not only by using the loans provided by financial institutions of China, which is kind of government to government cooperation, but we also try to encourage companies to do their own investment.
Zimbabwe is on a drive to woo investors back to the country. It has relaxed policies and introduced reforms to make it easier for foreigners to do business in the country.
I think that globally the government is doing quite a lot of things to address investor concerns, which may be around issues of remittance of dividends, which may be around the indigenization program, which may be around the education of the people, the ability of the people to adapt to new technologies. By and large, all these issues have been addressed. The government has put on the table the indigenization law, and everybody is not being done in secret. Everything is on the table, so people make decisions on the basis of information that is available.
Last year, Zimbabwe and China signed a $218 million network expansion deal to develop state-owned mobile operator Net1. Two leading Chinese telecommunications companies, Huawei and ZTE, are already doing business with Zimbabwean companies. President Robert Mugabe signed a number of agreements with his Chinese counterpart, President Xi Jinping, during his visit last year. Leslie Mirungu, CCTV.
And a quick check at the currencies before we wrap up. The Kenyan shilling held steady against the dollar on Friday on the back of tight local currency liquidity in the money markets, which usually makes it costlier to hold dollars. Stocks were higher for the third straight day. Over in West Africa, Nigeria's Naira closed at a record closing low of 191.25 to the dollar on Friday. And that's despite the central bank intervening for a fifth day this week to prop up the currency. All right, so we shall wrap it up down here on Global Business. Do send your feedback to globalbusinessafrica@cctv.com. Visit our Facebook page, CCTV Africa, and also stay in touch with Global Biz on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thanks for watching.